What's up, everybody? It's Omar at 6:58 p.m. October 28, 2017, and I wanted to make a quick video talking about my two trades. I took a short on AMD, which was a killer short, and I took a long and a short on on Twitter. So let me lower that down. So this was my watch list for Friday. Twitter was on it, but AMD wasn't. But I've been watching AMD closely. I should have put it on here because it's just been tanking. So I have this 2-candle dip buy scan that I have, and what it does, it just tells you stocks that are dropping in price over 2 consecutive minutes. So they close each minute lower than the previous minute, and AMD popped up on that scanner. Very, very simply here. Let me pull up a clean chart so you can just see it. I'm gonna remove all the indicators just so that you guys can see all of this better. What I don't want you to. It's okay. I guess I could leave it. So this is the 5-day 1-minute chart, right? Support and resistance is everything, right? And if you look at over the last 5 days, if we zoom in here, this seems to be the low right here. About this, we're gonna say this is the $12 mark, right? It's kind of been bouncing off 1201, right? So if you know that's the support level, if it breaks below it and everybody sees it, guess what everybody's gonna do? They're gonna short the stock. So very simply, right? Market opens, so what happens? It starts tanking at the open, right? Starts tanking at the open, right? Bounces off. This is the previous day's close price, has a little gap up, but it forms a lower high, right? Because if this is high a day, right? This is the high a day, right? So it has this range. This is the high, this is the low, right? And what happens? The stock gaps up, right? It comes down, bounces off the previous day's close price, but look, it never gets back above the high. So what is that showing me? It's telling me that it's weakness here. So all that happens is the stock just tanks. And this is the parabolic SAR. It just basically means this: when the dots are above the stock, that means it's supposedly going down in price. The trend is to go down. The stocks are when the dots are below it, that means the stock is going up in price. There's no guarantees in anything. If it was that simple, everybody would use this and everybody would be billionaires, right? It doesn't work that way, but it's just a helpful indicator. Sometimes I use them, sometimes I don't. But basically, once it broke that $12, that was it, bro. This thing just tanked. And look what happens, right? Stocks gaps down, right? You see it gets to about 1170, right? And then you see like double bottoms here. You got this little spike, but what happens is, this is what's happening. People who are shorting the stock are covering some of their shares here. And what's happening is new buyers that see this say, oh shit, this is showing more weakness. So they just take a short, risking this, and they just take this back down, and then the stock continues to gap down. So when I went in at 12, I saw it starting to bounce up. I wanted to see if it was going to break 1190. If it broke 1190, I probably would have covered, but it didn't. So I just felt comfortable, and I just wrote it down. I only shorted 1,000 shares. So I just saw this ride all the way down. It got all the way down to, it was 1141, and I just literally watched it tank. Right in this 1141 area, I saw it starting to gap up. It got above 1158. I was gonna cover because I thought maybe this was the beginning, but I wanted to see if it was gonna test. And once I saw that it came up to here, 1158, and it didn't continue to gap up, I just held strong, and I saw it can gap down. And once I saw it form this like double bottom here and it started gapping up, this is where I covered. So I covered right at around 1151. So it was nice. I made a little, about $500, a little over $500 on that trade. I could have, because so this is why I covered, because I saw it I saw it gap up here, come down, right? And I saw it gap up. So when I saw the double bottom, I thought maybe this was where it was gonna start to trend up, and it actually touched this 1156. See now previous support plays resistance, and then it kind of came down. So it got to 1135, and at 1135 this was the bottom, and then this is where shorts decided to cover and the stock spiked. And this is why I tell people to I didn't. I was on Twitter the rest of the day, so I didn't pay attention to it after I covered. But I should have, because if I known better, right? Because I teach this and I tell you guys this all the time, is that if all these short sellers are here, what's going to happen is at some point they're going to cover when they see a clear bottom, and that's going to generate an artificial spike, and that's what happened here. So you know, you got this 1135 gaps up here, comes down, but you see it forms this higher low here. So the low here was 1136, which is literally 1 cent above it, and then here you get the spike, and then there it starts going, and you got this spike all the way to 1173. All right, so this is where, you know, that's why dip buying, you got to be careful. Sometimes there's fake outs where you think, all right, this is where the trend is going to reverse, and it doesn't. Like, for example, you could have thought, all right, here's the bottom, it comes up, here's the second bottom, is the higher low. So you take a crack at it here, thinking that it's going to run, and look, it tanks. But the good news is that, let's say you got in, right, you see the higher low here, and you get in at 1150, the break over 1150, and it comes down, you know, you're risking 10 cents, you know. So, you know, it depends. 10 cents can be a lot, 10 cents can be a little. If you have 1,000 shares, you lose $100, you know. If you have 500 shares, you're losing $50. So, you know, it really depends. And that would have been, you know, a possible, you know, try here, and it wouldn't have been the worst trade. But, you know, that's what's good about dip buying, that you know you're clear risk, you know. And, you know, but this was, it actually went down a little more, found this bottom. The thing about dip buying, you got to be real patient for the reversal, but it will come. It will come. And, you know, you got a nice little gap up here, and it kind of formed this, look at this, it double topped sort of here. And then what happened? The stock tanked again, so you could have took another short here once you got that double top, you know. And look at this, came down all the way to 1152, you know, and then it's kind of been sideways consolidation for the rest of the day. And then look, it towards the end of the day, it actually spiked again because all those shorts covered, and it got up to almost, it got up to 1190. So, you know, you had another opportunity in the late afternoon where you got this sideways consolidation. Usually, you know, so usually sometimes it'll just consolidate sideways the rest of the day, but here towards the end, people started buying. So I probably more shorts that shorted here in this 1170 was saying, shit, it's not gonna break down. I just want to take my profit here, and they just covered, and that's what caused the artificial spike. So trading psychology is really important, so that you know, you have to kind of get a sense of what buyers and sellers are thinking. You know, that's how you can kind of get a sense of where the trend is. The other stock, the big winner, was Twitter. So Twitter was on my watch list. I posted it, and you know, Twitter, I just knew it was gonna run because tech stocks are just on fire. Twitter had good earnings, and if you notice here, this was the previous day's high right here, so 2031. And if you notice, you know, stock opens and right in, actually I waited for, so, you know, I watched the stock come down, it kind of gapped up, and then it kind of gapped down, and it formed this new low here, 2015, and then it started reversing, and it started running. And, you know, I saw it kind of break the high. I didn't get in yet. I wanted that confirmation, and good thing I didn't, because it got to like a high of 2075, and then it tanked all the way down to 2046, and then you got this crazy bounce. Once I saw it break above this for the second time, it was an easy entry. I mean, everybody sees that there. So I got in over the break over 2071, and I just literally rode this up the rest of the day. You know, it just kind of gapped up. It broke over 21, came down. I went in 1,000 shares here, and it just kind of ripped. It just ripped. It came down, but I saw that it formed a higher low. So you see how here it formed, you know, this. It formed this. This became support here. This 2099, and you know, kind of rode it. It broke below it for a second, and I got a little bit afraid. I was like, oh shit, maybe I should cover. And I was about to just cover, which should have been the right thing for me to do. But I just sensed that, you know, that because tech is doing so good, I just thought that, you know, my catalyst was I think more buyers are going to come in and drive the price of the stock up. And sure enough, this thing took another rip. And, you know, I was greedy. I just held through all this. So I got in at about 2071, and I held all the way up till I started seeing the reversal. So once I saw it, you know, I saw it hit a high here. So, you know, I was kind of skeptical. But I saw the sideways consolidation. So I thought it still had more to go. And then it did it again here, where this becomes the high of day. But it had the sideways consolidation, so I thought there was going to be another spike. And sure enough, there was another spike. So once I saw the parabolic SAR here start to, you know, gave me this trigger, I figured people were going to start taking profit. And once I saw the selling pressure coming in, I actually got out. And I think it was I was gonna hold. I said, let's see if it breaks 2150. And once it broke 2150, I got in. So I got in at 2171, got out at 2150, which was great. I made, I don't know, like close to like 750, something like that. So it was a great day for me. And sure enough, this thing tanked. Right. So once it broke below, so let me zoom in. Once it broke below, oh, I'm in the wrong spot. Sorry, guys. So once I saw that, you know, it was coming down and it broke below 2150 and I saw it bounce up, I was going to take a long on it over the break over 2050, but I didn't feel too comfortable because I didn't feel the volume. But this is why I took the short. So this is the higher day, right? Look what happens if it forms this double top right here, right? Which is, and let me remove all my trend lines. See, I put a lot of trend lines while I'm in a trade. So let's look at this, right? This is the higher day, right? Let me zoom out a little bit. Oops, sorry about that, guys. All right, so let me zoom in more. So, all right, this is the higher day, right? All right, so I see a break over 2150, right? So I sell my shares. Then I see a gap up. Let me zoom in. But what happens? Lower high right here, right? So that's showing me weakness. So once I see the selling, I took a short right in here. I just took a nice, it was simple. I took a nice short right over the break. I said if it breaks below 2150, I was in. And once it broke 20, I had my sell order ready on the bid at 2150, and it got executed here. And boom, I just took this down, and you know, I just wrote it down. It just kind of gapped up, but it kept showing me lower highs. See, lower high. So that's showing me there's more weakness. Boom, and it came all the way down to about 2114, popped up to 2130. I stood in. I should have covered in here, but I got a little greedy. And then once I saw the sideways consolidation, I was like, shit, there may be a trend reversal. So right in this spike right here, I covered. I think I got out like at 2128. So I got out. I saw shorted at 2150. Got out at 2128, 1,000 shares again. So you know, so that was a nice trade there. A little over $300. So I think total for the day almost like $1,800, something like that. I think I made. So you know, it was a great day. Simple trades, guys, and that's all it is. So support and resistance, guys. That's how you make these trades, going long and going short. It was very simple, very easy, stress-free day. And that's kind of what I'm looking at. You know, I'm looking at the trend reversal. I know a lot of people look at time, and I'm looking at time and sales here. Level 2 down here. I don't go too crazy with level 2. I'm just more focused on the volume bars. You know, so you have these volume bars here, and I'm just more focused on the volume and the time and sales, the time and sales print. Some people are like big on level 2. And there's other traders like Canal from Bulls on Wall Street. He doesn't even look at level 2. He makes an argument level 2 is pointless. You know, that the reason why brokerages let you use it, you know, they don't charge you for it because it's really pointless. So you know, there's a catalyst for all this stuff. You know, it's just a matter of support of preference. I had trade ideas, guys. I just canceled it. I didn't feel like it was worth it for me because of my trading style and because I trade from work. But I'm having real issues with Thinkorswim. To be honest with you guys, Thinkorswim is not a good like if you day trade, it sucks because the executions are horrible on Thinkorswim. They are terrible, you know. So my idea is I just did stocks to trade again. I used to have a stocks to trade account before, but I canceled them because it was very glitchy. But one of the things I have to say about stocks to trade that I do love is that, like, if you pull up a chart, so I did it's like 7 days and you pay 1 cent, but it's like 180 a month. I used to have 149 a month, but it's very glitchy, you know. But what the cool thing about stocks to trade that I say, so let me take a step back. Trade ideas eviscerate stocks to trade in terms of scanning. Like the scanners on trade ideas is far superior to stocks to trade. They're not even in the same realm. But what I like about stocks to trade is you know, you can kind of get a lot of information in one screen. So you can get like the high, the low, the volume, 52-week high, the low, the shares, the float. And then you can also get like the news right here to the side. You can go to the SEC filings. You can see like who's talking about it on Twitter. You know, you can see key statistics here. So you can see how many people, you know, what's the available short float and stuff like that. And then you can even go to the SEC filings. You can do all that here. Now, the thing that I really love about this, that is gonna probably have me keep this, is the Fibonacci retracements. It does it automatically for you, which is fucking awesome. So let's say I want to open up Fibonacci, and in a nutshell, without getting too deep into it, I'm still learning Fibonacci. I'm not no pro at it. And look how long it took to load AMD. So you can set it so that when you open a chart, the Fibonacci appears. So let me show you guys something, how this sort of works. So I'll do a 5-day chart. This is a 5-day 1-minute chart, right? Let me remove these things. So the way Fibonacci works is, in a nutshell, you have a trend, either a trend going up or a trend going down. So this is a new trend because the stock is at a high here, and this was on March 25th. This is when AMD fucking tanked on the earnings. And basically what happens is, when a stock kind of has a sell-off, when it was on a trend, because this was trending up, it trends down. So you have these retracements: 0, 32, 50, 61%, 61.8%, and 100. Basically the way it works is 50 and 61%, and really 61.8% is like the holy grail, where there's traders who look for stocks that are like let's say a stock like this that's tanking, and they look, and basically Fibonacci's are like basically support and resistance levels. But let me zoom in here. So you see it tanks, and what happens is they look to see it tank, and for a second here it kind of dipped below 61.8. But if you notice, it holds 61.8, and then they buy the bounce. So when it holds 61.8 and they see it gets volume, they just dip buy them here, you know, at 61.8%. And you know, it's kind of hard to explain, but it looks for trends. I'm trying to see what was Friday. Wasn't a lot going on. Let's see this CMLS. I don't know. Oh, this wasn't. Let's see. Let me pull up another chart. So you see how long it takes. That's the thing about the stocks to trade, man. So all right, here's the opposite. The stock gaps up, right? So here's the run, right? It gaps up. It finds its high here. You see how it gaps down, and you know it kind of retraces close to the 61% level. So right in here, people buy that retracement. So the stock gaps up, it retraces, and then they dip by it looking for a push up. And there's traders who just do that. You know, that's all they do, is they look for a stock that spikes, look for the retracement, and then either at the 51% level or the 60% level, they buy the retracement. That's sort of what it is. I'm trying to get better at it, but it is very powerful. Even Tim Sykes acknowledges it in one of his DVDs, that Fibonacci retracements has a lot of value, you know. So you know, you see the spike, you see the gap up, it retraces back, and you know, you got this retracement, this initial retracement here, you got the spike up, it retraces, and then sideways, and then it breaks back up. So you know, it's hard to explain, but watch some videos on it. It's actually very powerful. What I love about stocks to trade is that it actually sets it for you, which is very, very fucking cool. So that's my video, guys. All right, if you have any questions, let me know. I'll let you know about my you know, my stocks to trade experience, if I'm going to keep it or not. I'm going to give it 7 days. So my goal is to completely get off Thinkorswim. I'll keep like the charting and stuff like that, but I'm gonna try to see if I can get on IB, Interactive Brokers. Maybe try to, I don't know, like I'm gonna see if I can get on the Wi-Fi at work and try this shit again. I don't know. I really would love to be with Centerpoint again, but it's just difficult to trade from work. So eventually I'm gonna give this shit up, because the executions they just drive me crazy. Like for options, they're great, and for swing trading, they're great, but for day trading, they're just really, really bad. You know, today was just lucky where, you know, I was able to make these trades and it was stress free. But sometimes I'm trying to get in and out very fast, and that's when they're really, really terrible. All right, so hope you found this helpful. You know, like, subscribe. I have a YouTube channel. All right, watchotrade. I'm on Twitter. All right, so have a great weekend, guys, and like, subscribe, and comment. All right, have a great